In this video, we're going to talk about what a tipped employee is. So a tipped employee is someone who regularly and customarily receives more than $30 a month in tips. That's the federal statute. Keep in mind, some states have a different standard. I saw a couple of them as reported on the Department of Labor's website that some states have a $20 standard. That's actually a higher standard because it means a person has to only receive $20, not 30. So it's actually a higher standard. But again, they must receive at least $30 from a federal statute. In your state, they may require 20. You must look that up. So a tipped employee is normally paid a minimum cash wage. So here's an example. In the state of Louisiana, the minimum wage is $7.25 an hour. And we follow the federal rules with this. So $2.13 an hour is what the minimum cash wage would be here in the state of Louisiana. And the tip credit would be $5.12 an hour. Basically, that means the employer is only paying the employee $2.13 an hour, and the tips that are being received by this tipped employee can be counted against as a tip credit. But both have to be added together and be equal to or greater than the minimum wage. So if for any reason your employee doesn't get enough in tips, you must still pay that person at least minimum wage. So remember, some states have higher cash wages and have a higher tip credit or a lower tip credit, but it can't be less than $5.12 an hour. But those states must pay at least minimum wage. So this is something that I can tell you if I've asked most tipped employees I've known, I've asked them, hey, did you get told that you were going to be a tipped employee, or did you tell that your employer tell you any of these components? I've had a few tell me no. And this is actually a pretty serious thing because if your employer is not telling you this, or you, the employer, are not telling your employees this, you could be putting yourself in a very dangerous situation. So there is a required notice. Now, the government says oral or written. If you were to ask me, I would tell you to put it in writing and to get the person to sign off on it. Get proof of their acceptance of these rules. Don't just take their word for it, because if you're ever audited, you're going to have to prove that they actually saw this and agreed to it. So in writing is definitely recommended. But failing to provide this required information means that your restaurant cannot take the tip credit and must pay the full minimum wage for that person. So for instance, you have to tell the employee the amount of the direct cash wage that you're paying the employee. You have to tell them the additional amount claimed by the employer as a tip credit, which cannot exceed $5.12 an hour. And then, of course, the tip credit claimed by the employer cannot exceed the amount of tips actually received by the tipped employee. You're basically telling them, hey, the most I can take as a tip credit is $5.12 an hour. And then, of course, that all tips received by the tipped employee are to be retained by them, except if you have a valid tip pooling arrangement. And again, it's limited to tipped employees. And then the tip credit will not apply to any tipped employee unless they've been informed of these tip credit provisions. Again, this is a required notice, and definitely strongly recommend that you do this for every employee and get it in writing. So did you know that 29 of the 72 restaurants that came up with compliance issues in 2023 did not pay their employees their full tips? In other words, some of those instances, the employer was keeping them and not giving it to the employee. That's a big no-no. Some of those employers were allowing their management staff and their kitchen staff share in the tips. Again, they're not allowed to share in the tip arrangements, management staff especially, but also non-tipped employees. And then in some instances, the employer didn't even give them their tips, period. Those particular instances, those employers or restaurants had to pay back wages and liquidated damages in the amount of over $884,000 due to that employer's negligence. So you can be rest assured that this is something that will impact you if you don't do it correctly.